Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. It is Tuesday, the 25th of October, 2022. Earnings season in full gear right now. So before that, though, interest rates across the curve for Treasuries a bit lower, which is positive. Dollar off a little bit, which is great. Futures are off as well, which maybe is a little head scratchy. NASDAQ is making a bit of a comeback, but Dow is down a bit. You've got some components like 3M and I think GE. Well, maybe GE's turned around, but 3M is lower. And I'm scanning for any big takeaways from this morning's earnings, and the one that stands out is Halliburton, to be honest. So oil service narrative, I've been talking about it for a few days now. CEO, quote, "We see activity increasing around the world, from the smallest to the largest countries. In North America, activity is stronger than I have ever seen it at this point in the year." Stocks up modestly here. Given Schlumberger gave a little bit of a preview of what to expect, so stocks had a little bit of a run. Still, I love this space. So, it's one of those things where it's not as sensitive to the price action in crude. It looks like it's, if you want to talk about baseball, maybe it's the third inning in a cycle for these guys. So it looks like a good place. Halliburton, Schlumberger, Schlumberger is the 800-pound gorilla, but Halliburton's doing just fine as well. Baker Hughes seems to be lagging a bit. I don't know that I do that one that much. So SLOB, SLB, HAL, or the OIH ETF. Natural gas making a bit of a comeback again today, which is a little bit interesting. I did see an honorable mention in favor of small cap E&P names, so I do want to do a little bit of work there, like the Matadors of the world, those kinds of things. And Saudi energy minister says emergency stocks are being used to manipulate the market by some actors out there, calling out our own POTUS and his move to drain the SPR pretty much, which is infinitely puzzling. One name that I just started doing a little bit of work on, Illinois Tool Works, ITW, obviously cyclical industrial. It's moved from the lower left, upper left to the lower right, like most stocks. They beat on top and bottom. Fiscal year organic revenue looking up 11 to 12 versus prior 7 to 10. So that's really nice. Raising the EPS range as well. I'm going to take a closer look, but that's really encouraging. The stock's just below its 200-day moving average, so it's going to gap up a little bit this morning. Nothing crazy, but that conference call should be interesting to get a tone of what they're looking for going into 23, what they see for margins. Really important because obviously a lot of stocks are at or near peak margins. So Illinois Toolworks does look interesting on a rebound, potentially to play the rally continuing. Speaking of which, rally looks intact. 38.50 is where the 50-day moving average lies. After that, it's all the way up to 4,100, which Mike Wilson has actually suggested. Morgan Stanley, the big bear over there, has suggested we could move to for this leg of the bear rally. If we do go to 4,100, right around the 200-day moving average, that's still going to be an area where we are making lower highs. So the downtrend will still be intact, even after a move of significant magnitude. So interesting. We're playing along. We're thinking about getting rid of some of our PSQ. We've got inverse Nasdaq 100 ETF here. I'm thinking about just putting it aside, but I don't know. We'll see. Big earnings out of the big four coming up. Stay tuned. We will talk to you tomorrow.
some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.